I welcome you back in this video. So today I think I'm going to be continuing from where I stopped last time, where I had told you that we shall be learning how to identify trends, the different types of trends, like among others. So in today's video, so let me first do this. Let me first make this a bit bigger, then make my screen look bigger. Okay, full screen. Yes. Hold on. Let me first fix something. Full screen, current window. Okay, so now, as we talked about that, I'm going to be showing you how to identify trends. Okay. So as you know, we only have three types of markets. Okay, we have the okay. Let me first get out my text tool. Let me first adapt to my favorites. We have three types of markets. Okay, so we have the okay, actually we have two types of markets. We have the trending markets, and then we have the ranging markets. Okay, we have the ranging. Let me use caps lock for this case. We have the range. We have the ranging markets. Okay, we have the range markets. Then we have the trending markets. Okay, then we have the what? The trending markets. Trending markets. Okay, so you have the trending markets, and then you have the ranging markets. Okay, so under the ranging markets, we only have the ranging markets still. Okay, so under the trending markets, we only have the uptrend and then the downtrend. Ranging, we only have the ranging. Okay, and then under the trending markets, we have the uptrend. Let me use text here. One, we have the uptrend, and then two, we have the what? We have the we have the downtrend. Okay, we have the downtrend. So these are the only markets we have under the trending markets. Okay, because they have direction. So under these, the ranging markets, we only have the consolidating markets. Okay, we have the consolidating markets. Okay, we have the consolidating markets over here. Consolidating markets over here. So let me first try to make it look a bit smaller. We have the consolidating market, and then here still we have the uptrend, and then you have the downtrend. Okay, so I think let me begin with the easiest one. Okay, which is the ranging markets. Okay, or the consolidating markets. So how do they look like? So ranging markets, like this is how they look like. Because they're the easiest, and you don't trade them. Okay, unless you know how to trade it. That's when you will only trade it. Okay, so let me clone it, then put it over here. So the ranging markets will have no trend. Okay, will have no direction. Okay, so they will just be moving up and down in the different direction continuously. Okay, so let me show you that how they are formed. Okay, let me begin with the easiest one, because we shall not be trading this. Okay, so this over here, it can be found maybe at the extreme high or the extreme low of the trend. Okay, they have no direction. Okay, so I won't talk much about this, because we stay away from this. Let me just put it here. Stay away from this type of markets. Okay, stay from this type of markets. Okay, you don't trade it. Okay, you don't trade this. So I'm going to first explain everything in the ranging markets, and then we shall be seeing more of the trending markets. Okay, so we shall have to stay away from this. Let me even put here an NB. Sorry, let me put it here. NB, not before. stay away from this type of markets unless you know how to trade it, okay? But we as beginners, we advise to stay away from this type of markets, okay guys? So if you, whenever you see something like this, something of this scenario, just stay away from the markets, because this is really dangerous, okay? So then we have I think this is enough for the ranging markets, okay? They have no higher highs, they have no higher lows, they have no lower lows or lower highs, okay? So what I'm going to do is I'm going to first leave this part over here, okay? I'm going to first leave this here, okay? For this case, I'm going to first leave it out. Let's first forget about this, okay? Let's forget about this in the first place, because you have to stay away from this. So I only need to first focus on things that we mainly have to put our aim and focus on, okay? So I'm going to talk about now this over here. I want to talk about the uptrend and then the downtrend, okay? So let me begin with the uptrend. Let me begin with the uptrend. Actually, what is a trend? I think you know what a trend is, right? A trend going to the upside, a trend going to the downside, okay? So we have the uptrend and then the downtrend. I think it's obvious here. Downtrend, uptrend, okay? So let me begin with the uptrend. So let me begin with the uptrend. Uptrend, okay, that's the uptrend. Or in two brackets, let me use shift here, then open my brackets, then call it the what? The bullish markets, okay? You can call them the bullish markets or the bear or the uptrends, okay? So don't confuse yourself, okay? This is the uptrend, bullish markets, okay? So as I talked about recently, that this trend is made up of candles, right? We drew some candles last time here, and then I was like, the green candles represent the what? Represent the bearish, rather the bullish markets. I think I talked about that recently, okay? And I was like, they open from up, rather from down, going to the upside. Did I say that? Yes, I said it. So let me change its color to let me change it to green as well. So this is how it will be looking like, okay? These are the what? These are the bullish candles. The bullish candles are the ones that are always green, okay, for the beginners, okay? But as you go on, you can change it to any other color that you feel like you want. And then I say that these candles, okay, these candles open from the downside, okay, and then they close from up, okay? They open from down going up, right? That's how they look like. They open from down and then close from up. So that's why they are in an uptrend, because they close from up, okay? So let me remove that drawing. So how does the uptrend look like? Okay, the uptrend is made up of what is, let me put this, what is the uptrend made up of? Okay, that's the question that you will have to be asking yourself, like, what is the uptrend made up of? Okay, so the uptrend is made up of higher highs and then higher lows, okay? Higher highs, higher lows, higher highs, higher lows. So let me put that here. It is made up of one is made up of the higher highs, okay, higher highs. Two, it's made up of the higher lows, okay, the higher lows. Then what makes the higher highs and then the higher lows? That's the other question you will have to ask yourself, okay? What makes the higher high and the higher low? That's the other question that you will have to ask yourself, okay? What makes the higher high, the higher low? So the only answer is here. The only answer here is one. The uptrend, okay, is made up of, the higher high is made up of a pull phase, okay? I mean rather a push phase, okay? It's made up of a push phase, okay? A push phase. And then two, a higher low is made up of a what? A pullback, okay? is made up of a pullback. Okay, it is made up of a pullback. So this is the only thing you need to be knowing if you're dealing with an uptrend, okay? That the uptrend is made up of higher highs, higher lows, and what makes the higher highs and then the higher lows? The push phase and the pullback, okay? So let me add this as well. Let me add this. The push phase makes the what? The higher high, okay? And then too, the pullback makes the higher low. Easy as that. Okay, the push phase makes the higher high, and then the pullback makes the higher low, okay, if it's an uptrend, okay? So let's see this in an example, okay? So how does the pullback, how does the higher high, how does the higher low look like, okay? So let me explain that to you in a simple way, okay? So what's this? That's a push, right? That's a push, right? And then what's this? This is a pull, right? What's this? A push, right? And then what's this? A pull, right? What's this? A push, okay? And then what's this? A pull, okay? What's this? A push, okay? So meaning that this move over here is called a what? A push phase, and then this move over here is called a pull phase, okay? This over here is called a push phase, and then this is called a pull phase, okay? And then we said what happens in a push phase? In a push phase, this is where the push phase stopped, right? So meaning that this is where I'm going to put my higher high, okay? That's where I am going to be placing my higher high. And then what happened next? A pull phase, right? Or a pullback, okay? What happens if a pullback is formed? A what? A higher low is formed, okay? And then what happens if still the market pushes up? It forms a higher high, okay? It forms a higher high. And then what happens if the market pulls back? It forms a what? A higher low, okay guys? It forms a higher low, right? Still continuously until we see a change of character of something of that kind. I'll be telling you more about it in the further videos that I'm going to be releasing, okay? So let's continue now, okay? So after we knowing that, let me clone this, then put it here, okay? That's the higher high, and then market formed. Let me clone it. I'm trying to use the easiest methods on how you can understand this, guys, okay? So let me clone it as well, okay? So as I told you, push, pull, okay? Push, pull, okay? Oh, if you don't use the push phase, you can call it the what? Impulsive move, okay? You can say an impulsive move, okay? Or if you don't use a pull phase, you can call it a correction move, okay? Depends on what you want to use it, okay? So as I told you, if the push phase happens, the higher high is formed, and then after the pullback, a higher low will be formed, okay? Stuff like that continuously. So that's the easiest way you can identify this trend, okay? So after we knowing all of this, what do we do now? Because we know that we get an uptrend, right? Because as you can, if you look here, if you look over here, okay, you can see that price is in a what? An uptrend, okay? It's an uptrend, because it's going to the upside, okay? That's the first thing, because if you look here, you can see that price is now going to the upside, okay? And then what happens in an uptrend? There will be higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. The previous higher low will be higher than, rather the current higher low will be higher than the what? The previous higher low, okay? And then the same thing applies over here. The current higher high will be higher than the previous low, okay? The current higher high will be higher than the what? The previous higher high, okay? It will be higher than the other. So all of this over here, this higher high, then this higher high, then this higher high, then this higher high, okay guys? higher high, higher high. Okay, so another thing is what you ask yourself: what time frames? Okay, what time frames do we use? Okay, let me first try to do this and see. Sorry, guys. Let me delete it. Let me see. No, it won't work. It won't work. It won't work, guys. It won't work. It won't work. Actually, it won't work. What I'm trying to do. Okay. Actually, it will work. So let me drag this over here. Let me extend it here. Okay. Nope. Doing a mistake. Let me highlight them all. Okay. Let me highlight them all at once. Let me highlight them all up. No. Actually, let me just leave it. Okay. So another question to ask yourself is that what time frames do we use to identify a trend, right? That's the other question you must be asking yourself. Okay. What time frames? What time frames? Okay. Do we use to identify trend, right? Trend, and then that will be a question mark. So the answer is we shall be using, so my answer will be here. I'm going to be using the bigger time frames. Okay, the answer is 1, bigger time frames. Okay, bigger time frames. And then what do I mean if I say bigger time frames? Okay, what do I mean if I talk of bigger time frames? So if I talk of the bigger time frames, and the bigger time frames, I'll be having the 1 hour. Okay, I'll be having the 1 hour. Then 2, I'll be having the 4 hour, so on and so forth. Okay, so these are the bigger time frames that I'm talking about in this scenario here. Meaning the 1 hour and then the 4 hour, and then maybe you can use the weekly or the daily. It depends on what you're looking for. If you're a day trader, swing trader, then it depends on what you'll be looking for in this case. So I think I'm going to be stopping here for part 1. We shall be continuing more with part 2 in time to come, guys. So peace. I sign out. Okay.